Okay, well, the stock is still holding up. It's up almost about 0.5%. Naveen Kulkarni joins in as well. Naveen, disappointment on the margin front, but strong top line. What would your view be on the stock now?
Yeah, so our view largely remains unchanged. So the pressure on the margins has continued to persist. So the margins, of course, are lower than expectations. Top line is something which is largely expected. Margins are the critical factor that we have watched out for from the results perspective. So that disappointment is something that we will have to see how that, what are the mitigating factors right now that the company is utilizing to improve the margins going ahead. So I believe there are certain challenges which are persisting. Input costs have continued to move up even as we are talking right now. So I think that's something that we'll be very, very careful about and watchful when we're looking at Maruti.
Okay. So what would your recommendation be on the stock? What is your target price now? And would you change your EPS estimates or earnings estimates at all post these numbers?
So at this point in time, our earnings estimates will go down slightly. And of course, target price, we'll have to see how much we will have to cut based on the change in estimates and the margin disappointment. And of course, view on Q1 of FY22 will be very, very critical. But at this point in time, I would say that cutting EPS by around 3 to 4% cannot be ruled out. As of now, we have a buy recommendation, but we'll be taking a call post the conference call and what we see in terms of the view in the forthcoming quarters.
Actually, that's very important, right? In an hour from now, there will be the conference call by the management, and it would be important to see whether A, they give any FY22 guidance, whether there is any clarity at all on sales growth, and B, what are they planning to do to combat these supply side disruptions, the semiconductor issues, the increased lockdowns, restrictions. There's so many challenges that Maruti is facing. Prakash Diwan, just one final comment from your end before we wrap up. This luckily or rather fortunately the stock has come off quite a bit, so there is headroom on the upside. It's about down 20% this year already. Do you think that this is a good time to buy Maruti, considering that the volume growth has been strong? Margin pressures, of course, is something that all companies are facing now because raw material costs are higher. So do you think that Maruti is a good buy at this price?
So Sonia, that's a moot point, irrespective of how things have been for the quarter gone by. See, the revenue is in place or fairly okay given the challenges. The EBITDA has been okay. The margins percentage-wise is the stress, and there could be, as Naveen was saying, there could be a catch-up on the entire yearly basis that might not make the stock look as expensive. The trigger for me to buy into Maruti, irrespective of how this particular quarter goes by, is the launch of the Jimny. And I will not be surprised if they prepone the launch. They've already done few batches and exported to Latin America from the India unit, which means the manufacturing capabilities are already in place and tested out. It's just a question of varying it to suit Indian regulations and norms. And once that is done, I think that's going to be what the Swift did a few years back to the company in terms of moving it to a different orbit. That's the trigger that I would wait for qualitatively. On the number side, if the sales numbers do not drop significantly, I'm good with buying it at levels of maybe another 5-10% lower if it gives you that opportunity. But it's not expensive or too rich even at these levels.
All right, gentlemen, thanks a lot for joining us and analyzing Maruti's numbers. So just to summarize, it's a mixed bag for Maruti this quarter around. The revenues were solid with a growth of 32% year on year. The miss came on the margin front. The EBITDA margin came in at 8.3%, a fall both year on year as well as quarter on quarter. And the core EBITDA at 1991 crores is a fall of 10.5% quarter on quarter. It is higher raw material costs that has hit the margins this time around, but the management has also announced a dividend of 45 rupees. Well, on that note, we will wrap up with this edition of the show. But thanks so much for watching. When we come back after the break, it will be time for the last crucial hour of trade. Closing bell coming up.